Good afternoon. This is StockTwits Phil Perlman. I'm here at the CME Group, New York City, the NYMEX floor. I'm joined today with my good pal, JC Parets, Eagle Bay Capital. You know him as All-Star Charts in the financial blogosphere. JC, how you doing today?
I'm doing well, Phil. How are you?
I'm good. It's great to have you here, to bring you in here. We're going to talk a few different charts in the future space. Let's start with Treasury bond futures, the ZB.
Yeah. As we know, with yields essentially flying over the last couple of months, bonds have gotten hit hard. And I think that we're in the midst of that transition, that big rotation that everyone's been talking about out of the bond market. Remember, this is a big trend that's been in place for 30 years. So when something's uptrending for 30 years, the top isn't an event, it's essentially a process. So if interest rates are bottoming out in sort of like a saucer sort of formation over the last couple of years, that process is beginning, and we're seeing that transition as we speak, and that's negative for bond prices.
And what's the confirmation? I mean, this is a monster trend. I mean, we had a 30-year sell-off, a 30-year bear market.
Yeah.
From the 40s to the 70s. We're talking big trends here.
Yeah.
Then we had this monster bull market in treasuries.
Yep.
And now we think we're seeing the end of that. Pundits have been talking about it for like the past 3 to 5 years, and finally we're seeing the signs. Where is the confirmation?
Well, Phil, like I said, it's a process. I think that the confirmation in terms of interest rates is really that 4% level. We really start getting above that, and like I said, we're still nowhere near that. We have to get through 3 and 3.5 first, but eventually, once we start getting above 4 and holding above there, we know that phase, that transition has ended, and we're in a new structural bear market in bonds. In terms of the short term, you really want to see these futures hold 136. We saw a big time break. We're essentially retesting those levels. It's still a downtrend in the bond market in terms of prices. So as long as we're below 136, I think that we're definitely heading lower. I think the first target's about 129, and then after that we have a measured move to about 117. So I think we have a long way to go, and this is going to be a process, like I said.
That's a big move. It's a big move. Okay, so let's move on and let's talk about cocoa futures.
Sure. Cocoa, I think, is breaking out as we speak. We have a nice long-term downtrend going back to 2011, and we're taking out the spring highs as we speak this week. So I think that if we can hold this 24 and a quarter level, I think the next stop is 2,700, and then after that we have some extensions as high as 3,100. So as long as it's holding 24 and a quarter, I think it's all systems go for cocoa.
So this is a descending resistance that we've seen. How far is that going back?
The trend line goes back to 2011, the late spring highs, sure, and that just broke.
That just broke.
And we're seeing the first higher high as we speak.
Okay, so that's something that is actionable, from a big picture. When you see, here on the floor, we're seeing a lot of traders in the time frame is a lot shorter.
Yeah.
So one of the beautiful things about what we're doing here right now is we're backing up the lens a little bit.
Yep.
We're taking a little bit of a longer, but you want to trade with the trend, right? So if you get, if you're going to get long here on cocoa, you're going to look for the short term entries and exits. But if you get that trend with you on the longer term, you have the wind at your back.
That's right. So we want to definitely close the week out strong for the cocoa futures. 24 and a quarter is the big number. As long as we're above there, we're essentially making the first higher high to go with the higher lows, which by definition makes it an uptrend, which we want to trade in that direction.
Okay, so let's move on. The final one, GC, gold. It's in the news. Yep. People are obsessed with it. It's the barbaric metal. What do you got? What do you got on that one?
I mean, talk about a downtrend, right? Absolutely, there's no doubt about it. We broke some serious support levels. If you take a look at the chart of gold futures, once we broke that 1340, 1350 level earlier this year, that's when the selling really got, accelerated to the downside, and the snapback rally got right back to that level. So as a technician, the first thing that you learn, kindergarten of technical analysis, if you will, is that former support turns into resistance, right? Where there were buyers, there will be sellers once the buyers run out, and that's exactly what we've rallied into. And the rally in gold and silver and precious metals has been very weak. If this was a real rally in precious metals, you'd really want to see silver outperforming gold on that bounce. We didn't really see that, so it was really a disappointing bounce for gold futures. I think that as long as it's holding below 1350, 1360, it's a short, it's going lower. And in terms of price targets, I'd hate to say it, but I think the ultimate target in gold is going to be that big breakout level in 2009, right around 1,000. 1050-ish.
So again, here we're backing up the lens. We're looking at, we're taking an opportunity today after the close here to sort of look at the bigger picture. And so you're seeing this 1340, 1350 area as being a critical resistance area. Say we get back above that.
Yeah. If we get back above that level, it'll be a short-term positive for gold. The big picture, I think, remains negative at that point, but we wouldn't be pressing shorts above those levels. At least for now.
Excellent, excellent. Okay, well, JC, thank you so much for being here.
Thanks for having
JC Parets, Eagle Bay Capital. This is StockTwits Phil Perlman. I'm here at the CME Group. Great to have you. Adios.